As we all know, investing in stocks can be both exciting and overwhelming. With so many factors to consider, it's not always easy to know where to focus one's attention on. When it comes to achieving big gains, which all of us dream of, there are two critical factors investors should keep in mind. One is mispricing, the other one is earning growth. Which of these two factors have a larger role when it comes to exceptional large multi-bagger kind of returns, like 5x, 10x, 15x kind of returns in stocks? That's a question which has fascinated investors for years. Now we are going to be diving deep into those answers. Hi everyone, welcome to this video post. In this post, we are going to be looking at this critical question. Which of these two factors which we discussed just now more critical when it comes to driving large exceptional multi-bagger returns? And that's what we are going to be looking at in this post, and hope it's going to be a very insightful one. Strangely, investors tend to focus exclusively on earnings growth for their stock returns. Of course, earnings growth can drive stock returns, good stock returns, decent stock returns. But can that alone drive, multi-bagger kind of returns in stocks? To find answers, let me share some insights from a recent, study which we undertook internally within our organization. In this study, what we did was, we went all the way back to our inception time, which is 2007, and looked at the stock returns. Looked at the return profile for all our portfolio stocks which we picked in this period. This covered all the stock picks in this period which delivered 5x, 10x, 15x kind of returns for us. There's a fascinating finding which was, there's one thing which was common across all these stock picks. That is, 80% of the returns in these stock picks came from the price which we paid. In other words, it came from mispricing from those stock opportunities. Only 20% of those returns came from growth in the underlying businesses. That's a stunning revelation. Chunk of your returns came from the price which we paid, which is a huge insight. Let me explain a little more about mispriced opportunities. In general, value investing focuses on the mispriced opportunities. In the mispriced opportunities, the returns come from two sources. One from the valuation multiple re-rating, and the other from the underlying growth. And as we saw in our study, close to about 80% returns in such opportunities come from the valuation multiple re-rating. Of course, there will be exception to this, but in our study, it was across our stock picks, it was very common. Whereas in the growth kind of investing, most of the returns come from the underlying growth. And since growth investing is a momentum kind of a trade or a consensus trade where there's a lot of herd action, market prices market prices in those opportunities more than the underlying growth, thereby limiting the potential gains. There's this myth that one got to find the next hot trend, hot theme, or buzzing growth stories for making exceptional gains in stocks. The reality is so different. A simple value strategy which focuses on price and value can deliver exceptional returns. That's what our experience also been. When we are talking about 10x kind of returns in 12, 13 years through a simple value strategy, that's not small returns. When we are talking about such a strategy can deliver close to about 2x returns every 4 years. And if you extend the horizon for 25 years, we are talking about 100x returns. That's a mind-boggling returns. Making mispriced bets is not so much about research. It's all about emotional and temperamental skills. Skills like ability to stay objective across market cycles, ability to swim against the tide, ability to stay invested for long with huge conviction, and so on. So basically, how one behaves near the top and bottom of the market cycles pretty much determines the long-term returns in stocks. Of course, research skills are critical, but the edge in investing comes from, especially in value investing, comes from emotional and temperamental skills. When these emotional skills get blended with robust research skills, it can make a huge difference in terms of, when it comes to delivering alpha or exceptional returns or multi-bagger returns in stocks. Before I conclude, let me leave you with this powerful quote from one of the famous value investors, Howard Mark. He said, and I quote, investment success doesn't come from buying good things, rather from buying things well. That says a lot about where and how to look for big extraordinary returns in stocks. With this, let me conclude this video post. Thanks for watching. Happy value investing. I hope you found this very interesting and informative. If you found this very insightful, please do like this video post, and also please do subscribe to our YouTube channel so that you get your regular uploads and updates. Thanks a lot for watching. See you in my next. Thanks.